Today we're going to discuss the EURUSD because it's at a spot on the chart where this Wednesday's FOMC could trigger a breakout. So I'll show you exactly what I'm looking for there. Plus we'll look at the DXY, the US dollar index, because it is at a critical spot on the chart and it could even give us an early glimpse into which way the euro is going to break. Now, if you guys do enjoy this content, be sure to subscribe to the channel and click the bell icon for notifications because I am releasing these videos every single weekday. Lastly, none of the content in this video or any video is ever financial advice because it is just my opinion. All right, so with that said, the EURUSD monthly time frame. I'm going to cover this quickly because we have discussed this over the past couple of weeks. So ever since the 2000s, the EURUSD has been moving within this ascending channel. Okay, now right now, the market is testing support, or at least it did last week. So this is going to be critical for the EURUSD because obviously it needs to hold above this support level in order to avoid a potentially significant breakdown. Now, before I show you guys what I'm looking for on the daily time frame, I do want to discuss something quickly because a lot of people get confused on what a daily closing or weekly closing basis means. And this is significant because everything revolves around this, okay, on the chart. So right here on the weekly, you can see that the EURUSD is technically trading below that 2008 trend line. Okay, so it had served as support back here. The market has now traded below this level for the past 2 weeks. Okay, so we've had 2 weekly closes below this, and obviously the daily is also trading below this because if the weekly is, the daily is as well. So the daily here trading well below that, but the monthly on the EURUSD is technically holding above the 2008 trend line on a monthly closing basis. So what that means is that until the month of March closes, which we're only about halfway through this month, until this month closes, it is technically still holding above this level. And that's simply because, again, the month hasn't closed yet. So there's still a lot of time left here. There's over 2 weeks left. We could see the EURUSD close down here. It could close right about where it is now, or it could even close all the way up here. So for that fact alone, we have to say that the EURUSD is trading below that 2008 trend line on a daily and weekly closing basis. However, the monthly closing basis is technically still above that level. And that could be a significant factor based on where the March closes, because typically the higher up you go in time frame, the more conviction there is. So a weekly close is more convincing or important than a daily, and a monthly close is more significant than a weekly. Okay, that's traditionally how it goes. Not always the case, but typically that's how it goes. So looking at the daily time frame, this is what I'm watching for this week. All right, so we've discussed this before where the EURUSD right now is kind of caught between this 2008 trend line, which it served as support back here. However, it did break below it here on March 3rd. Okay, so we got the March 3rd close below, and so far 110.80 has served as resistance. Now, to the downside, this is the multi-decade support down here between 108 and 108.50. So right now, the EURUSD is very range bound, and I would expect this to continue until this Wednesday's FOMC. Okay, based on what comes out of that meeting and out of that press conference, this could either trigger a move higher from the EURUSD or a breakdown below that 108 area. Now, at this point, people usually ask, what are my opinions on FOMC? Which way do I think this is going to break? And to be honest with you, I don't try to determine which way a market is going to break, especially based on a significant event like this week's FOMC, just because even if you get the outcome right. So let's say that you assume that Jerome Powell is going to be a little bit more dovish than usual, and that's going to bode well, for the EURUSD because the dollar could sink. The thing is, even if you get that part right, okay, about Jerome Powell being more dovish this week, the markets could react in a totally different way that you did not expect. And this is why I say that the event itself is really insignificant. What matters is how the market reacts to it. That is all that matters when you're trading a market. Okay, so the event itself, irrelevant. What the market does is the only thing that matters. So for that reason, what I'm saying here is that as long as the EURUSD is caught between these two levels, it is range bound. If we get a daily close up here above 110.80, then we have a breakout to the upside. If we get a daily close down here below this 108.50 area, then we have a confirmed break to the downside. Okay, so regardless of what Powell says this Wednesday, okay, and regardless of what the rate decision is and everything else that goes along with it, what matters here is what the EURUSD does on a daily closing basis. Now, with that said, okay, I would prefer to see a break higher, okay, back above 110.80 up here, just because there is more room for the Euro USD to run up here toward 114.80. Because this, in my opinion, would be the next resistance if we do see the Euro USD close back above that 2008 trend line, versus if it were to close down here around 108.50, the next key level is going to be right around 106.50. So about 200 pips of downside here versus 400 pips of upside. And the reason 106.50 is going to be significant is looking here at the weekly time frame, you can see that this was the March 2020 low. Okay, so this area down here is going to be incredibly significant. Obviously, we know that March 2020 was when we had that COVID sell-off, the Euro USD bottomed and then went on a run. Okay, so this area down here is going to be incredibly significant to where if the Euro USD does break lower, it is going to be very difficult to trade this, in my opinion, because there is very little room for error. Okay, especially when you consider that this recent low down here was right around 108. So you're basically dealing with between 108 and 106.50 versus if we do get that close back above 110.80, a potential move up toward 114.80. All right, so I just think that the more straightforward trade here and the better risk to reward ratio, in my opinion, for the Euro USD would be to get that close back above this level up here around 110.80 for a move back toward the 114.80 area. So would I short the Euro USD if we got a break lower instead of higher? It's debatable. We'll have to wait and see how it happens. If we did get a breakdown here and a rounded retest, I may look for a short there, but I just think that this is a much trickier trade than looking for that long opportunity above 110.80. So I can pretty much tell you that there is a 90% chance that I will long this pair if we get a close above this area up here, versus if we get a close down here, there's maybe like a 10 or 20% chance that I'll take a short there. So this to me is just a much more straightforward trade, despite the fact that it is against the trend. Because another thing you have to keep in mind here is that this market, ever since all the way up here, all right, back here in May of last year, the market right now is down still almost 1,300 pips. Okay, even from February, this past February, you can see that the Euro USD is still down just over 500 pips. So the problem with trying to short a market like this that's down that much is that you're going to get very significant aggressive relief rallies. Okay, think about this rally we got just a few days ago off of this low. All right, so this rally right here, you get shorts that start to cover and you get very aggressive relief rallies like this. So I think it becomes a difficult market to short. If you're going to short a market during a downtrend, you want to do so at points like this. All right, you don't want to try to do it down here when the market is down like it is since February. All right, now let's go ahead and take a look at the DXY, the US dollar index, because I do think this could give us an early indication of which way the euro is going to break. And let me show you why. So first up, we have the daily time frame. You can see that since May of last year, we have this ascending channel that's formed. Now, the market recently tested this level, which is a confluence of resistance based on several factors. So we have the top of this daily channel. We also have on the monthly time frame, this is a very significant level for the DXY, very similar to the Euro USD and the bottom of that channel. So in this case, you can see that since the 2011 low back here, the DXY had been moving above this trend line, and then it broke down back here in 2020. Now, the market, unlike Euro USD, where it's trading below that 2008 trend line, the DXY is technically still trading below its 2011 trend line. So that is a distinct difference between the two, because as we know, the DXY and the Euro USD tend to move inversely to one another, just because the euro is the most heavily weighted currency within the DXY index. So right now, this market is holding below this confluence of resistance. You can see it was tested last week. And we also have this 4-hour channel. So the smaller pattern here is going to be this 4-hour channel, where you can see the upper level here also intersects right there in that 99.40 region. Okay, so this is going to be a critical resistance area for the DXY. There are a lot of levels around 99.40. Whereas if we see the DXY get below this channel support down here, then there is a pretty decent chance we see it trend lower toward the bottom of that larger channel somewhere around 96. So this is kind of the reason why I say this could give us an early indication about the Euro USD, because if we were to see the DXY break below here before we see the Euro USD get back above 110.80, then this could indicate that the Euro USD is going to break higher, okay? But it's all going to come down to this Wednesday's FOMC. I do think that is going to be the trigger for not only volatility, but I do think we should see some nice trends develop after that. But just remember, while none of the content in these videos is financial advice, I personally will not be trading leading up to the FOMC and specifically during the FOMC, just because you get a lot of volatility during that event. And one thing too, I'll have more videos out before the FOMC, but just keep in mind too that a lot of times the first move you see from markets is the wrong one. So immediately following that rate decision on Wednesday, if you see the DXY move lower, initially, there's a good chance that that is a fake out and that the DXY is going to trend higher. Same thing if you get a move higher, that's probably the wrong direction. It's not always the case, but a lot of times that first move from the markets following a big event like FOMC is a fake out. All right, guys, so that is it for today. Again, I think FOMC is going to be a huge event this week, and it could trigger a breakout here from the Euro USD. So basically get below this area around 108. We're looking at 106.50. Get above 110.80, we're probably looking at 114.80. And as I said, I would prefer to see a close back above this area up here in order to confirm that breakout, because I do think that is the better risk to reward ratio. Just remember that either way, we need to see that daily close above this level or below support. All right, guys, so I hope the video helped. If it did, be sure to subscribe to the channel, click the bell icon for notifications, smash that like button, and leave your comment below. I will talk to you guys again tomorrow.